Alrighty, here we go. So, how was the bias formed in 30 seconds? Well, let's dive right into that. First of all, we're in a discount area and in balance. So it's a consolidation. I'm expecting expansion, especially this week. The high time frame data shows me that correlations and COT data that were probably neutral bullish. So that gave me some tailwind. We were in a weekly channel where we had tested the mid and broken up to the high side. I'll show you that here in a second. And then, so it seemed to me that we would want to attack that high again and that we're definitely oversold. So that's how we got there. Now, I want to show you the workflow, the context workflow. Here, look, I really focus on process. Process is the key to being successful. Edge, all of the esoteric knowledge that's shared online and a lot of the stuff you see online is just that. It's esoteric knowledge. It's all the same repackaged, regurgitated stuff. Very few people are willing to say exactly what it takes to be successful for lots of different reasons. But the people that I follow, they do, and that's part of why I follow them, why I'm attracted to what they have to say and why I use some of their stuff. But part of my contribution to this whole community and what I'm doing is that I'm trying to expose to you that it doesn't matter what you want to be good at. Process is the key, and managing your emotions and all that stuff that sometimes it gets into is not as relevant as you'd think once you understand process and you know how to execute it. So let me show you my context workflow for how I build it. Context is a sort of a familiar word, but it's easy to misappropriate it. It's easy to think you know what it means, but you really don't. So this is a way that I use to keep myself in a specific context, and the workflow built on itself. So what day or what is the market reaching for, and what market profile are we in? Well, it's Friday, and we've already achieved the target. I thought perhaps I had at least consider that it's possible that the week has already achieved its target. So if you think about that, let's just build the logic. If we have already achieved our target, what would we expect the week to do? Not very much, right? All right, let's build on that. Where are we in the power of three? So are we in the wick high, are we in the body, or are we in the wick low? Well, I kind of thought we might be in the body low, which gives us the idea that we could be forming the wick today. Okay, so that's interesting. What would that mean? Well, it would mean that we would press down first, right? Maybe, yeah, it would be pressed down first because the day has to close higher. If we're going to be in the wick, if we're going to form the wick low today, it's Friday. All right, well, what daytime frame level should be tested today? Well, I think both sides of the balance area that was formed yesterday. What news might generate that move? None. Okay, so think about it. What have we said already? The work might be done. We might be forming the wick low. There is a balance area that we're working. So what's that mean? That means that both sides will be tested. Well, which side do you think will be tested first? Probably the low side. Okay. What does the 4-hour price action market profile tell me? It says that it was an expansion, then it retraced. Interesting. What does the 1 hour say? Well, it's in consolidation and then expansion lower. Okay, you can visualize that. What does the 15 minute say? Consolidation. All right. So what you have is 3 time frames that are all operating really in concert with each other, just with different views of the data. So if we go consolidation, expansion, retracement, and the 15 minute is in consolidation, and that's coming from a 4-hour retracement, what would you expect the next thing to happen would be? Probably expansion. And given the context of what we said above, what do you think it would be? Probably higher. Okay, buzz yourself if you said lower. No, if we're in the wick, if we're going to form the weekly wick low, we would Judas swing lower and then expand higher. So that's what we saw happen today, isn't it? All right. So let's dig into the 3 and 3, the best 3 trades, the 3 daytime features and 3 expectations. The best trades with a 9.55 pullback long. I got that one. I added in at 10.17 and then held the target through the 11 a.m. pullback. The features were this opening drive lower and reverse, which is, again, if in the context makes a lot of sense. So I don't know about you, but how many times have you seen the market just rip lower like that and try and get on it short, only to find out that you're wrong, and you get run over 3 times, and then it just trends long, and you're like, how the heck? How does that happen? Well, that happens because we get caught as traders being manipulated into believing that the fast, strong movement in a singular direction means something. But it only means something in a greater context. So unless you have access to and are framing that greater context, you would never imagine that the market would run down so that it could run up. This is the problem that many traders have because they don't embrace the idea that the markets are manipulated. And you might not like that word, but the word manipulated is just simply saying that someone is controlling it. It is being controlled. That's all it means. Now, again, that can have the idea that there's some Wizard of Oz behind a curtain who is able to make everything do what they want it to do. But you hear there are people online who've talked about, Jim Cramer's online is saying that, about how he would force moves in certain markets so that he could buy it back the other direction. So there's a certain amount of ability to do that. Now the question is if somebody like that guy could do it, don't you think that there's somebody bigger? Don't you think that the institutions of the world and the way that they trade their money have the ability to make the market do what they want it to do and not be detected? Are you serious right now? So anyways, what I'd like to do is go ahead and dive in to the trades and show you what I have to show you. Okay. So I trade ES exclusively at this point, but what I wanted to show you as we dug in is how we built the context. So coming back to the day time frame, let's just explode this out. And my drawings are already on here, so it's going to make it a little challenging because I want to have something on there. And this tool doesn't allow me to hide some and not others. It's all or nothing in this world, and that's okay. So a couple of things to point out. Premium and discount. What do I care about with premium and discount? So you notice that in the day time frame that we came back down using this period to the mid, the 50 equilibrium, and then we pushed higher. Okay, so that's important. So that's just one thing I look at, and then I bring that down, and again, you can see it. I hate the fact that those are all like that, but what do you see? You see the same thing here. You see a kind of equilibrium location. And so you build your support and resistance levels off of that. And then since this happened the other day, guess what we do there? We say equilibrium and discount. So relative to this impulsive leg here, where are we? Are we in discount or are we in premium? And then you put them together and you say, okay, well, relative to this leg and that leg, where are we? Down here. Well, we're pretty much in deep discount and a little bit of discount on this higher time frame. So not to say the buyers will always buy that, but that's a relevant comparison. So you bring it down even further and you say, okay, all right, what's the biggest impulsive swing that we have in this area? And you go right there and you go, all right. There we go. And where are we down here? Well, we're down in discount. Okay, so if we take out some liquidity on this side and then start rocketing back the other direction, where do you think we're going? Well, you could say here or here. And this is the thing. Remember, we got to remember the context about what happened on where we are for the week. Is the week at the high? Is it at the low? Is it trying to form the wick high? Is it trying to form the wick low? Is it in the body? Is all of that relevant and meaningful? And that's basically how I form and frame my context. And then I build my structure levels off of those. Now, I want to just dig into the actual trades themselves. And we'll do that. I'll show you the explanation of everything here. This was my target for the day right there. This low a day, previous low a day. Excuse me, that's not right. The draw plus this high day, that low a day is not correct. So I've got that. I'm going to move that there. And the way I did this is I have two locations that I expected price to draw to. I need to delete that because that's just not doing what I want it to do. There we go. I had two locations. I looked at this and saw some clean lows down here, and I thought, well, you know what? I doubt that's going to stick. So if we are going to go higher and we need to take some people's stops in order to do that, where's that location? Probably here, maybe there. But this would be bad if we got that far. If we got all the way down here, that would be bad. But taking that out, it's okay. So you see this giant run down here. And I'll tell you what I'm looking at and what I see as I'm doing this. You see this big run and it stops at my support level, and then I start to see, look at all those wicks. Something about studying price action that you learn is the subtlety and the nuance is extraordinarily important. It is not just about highs and higher highs. It's not just about, I don't even know, breakout bars. I mean, there's so many ways people talk about it that I think that they're probably onto something, but they're not good at conceptualizing, containerizing, contextualizing what's actually happening. What do you notice about almost every single one of these bars? Almost every single one of them is closing above its mid. Now, when you're poking lower, and then closing above your mid, what does that look like you're doing? I mean, if you were an excavator, what would it look like you were doing? As an excavator, it's just digging deeper and that's pulling it right back up, digging deeper and pulling it right up. Well, in trading, what would that be? It'd be scooping them contracts up. That's what it's doing. It's scooping those contracts up. So you're simultaneously taking stops, but then also grabbing more longs and building up that base to propel us higher. Fake out move, scoop up all them contracts, dig up all that inventory, get it going, impulse higher. And notice that we're closing above mids here, closing at highs, pull back. Notice that. See right where it stops? Interesting, is it not? New high, stops there again to the tick. Interesting. Biggest move. All right, so this is how I narrated it. I said there was a impulsive breaker here, which told me that if we get above this, then I'm really going to want to focus on the long. Comes down, gives me a turtle soup configuration. Now, it's not a turtle soup based on my model, but it gives me that configuration. It pushes higher, and I'm looking at that, and that's important to me. Then we get a gap, fills and holds and respects, and a new high. So instantly now I'm on alert. I'm going, yep, I'm looking for this. I'm trying to get this. And actually, this was rebalanced. I could have bought here, but I chose not to. I waited until we got above here, and then I bought. I bought in this area as we came back down and rode this all the way up. And you can see that we're in a buy program because the signaling was there. What we see is a push, fair value gap hold, push, fair value gap hold, push, and then another gap hold, and then again. So it just, I mean, all that signaling tells you we're going higher. And what is it drawing to? I already had an idea in my head about where it might go before it got there. And it turns out it actually would go further than this. But right there, get that off of there. These clean highs here. So I said, well, that might be where we go. And if we're in the wick low, then it seems like a lot of buyers would want to finish the week up higher. It went a lot higher, and I didn't participate in any of that. But that's how I got to here. So, so much of trading feels like pushing buttons and having spreadsheets and coming up with plans and writing stuff down and having the best this or that or indicators and all of that. Well, could be that. But I'm going to contend to you that most of us and most of you are struggling because we don't understand our process. And if we don't have someone who can help us pick it apart, it's just going to be ambiguous. Either we're going to not know where we're guessing, or more than likely, we're going to guess knowing that we're guessing, hoping that we get a good result because maybe we had one before. But if you want to take your trading seriously and you want somebody who can help you pick apart your process, that is what I do. So with that, I'll leave you with this.